Nvidia's $81.6 billion quarter, AI factories and the China revenue risk. Explain what Nvidia's Q1 FY 2027 earnings release signals about AI infrastructure, reporting changes, and geopolitical risk, and what operators/investors should watch next. Narration: Nvidia just reported $81.6 billion in quarterly revenue, but the most important line is in the outlook. They are not assuming any data center compute revenue from China. That's not a headline flex, it's a map of constraints. Today we're going to separate what Nvidia confirmed, what it implies, and what to watch next. Not financial advice, this is an operating and market structure explainer. Narration: here are the receipts. Q1 FY 2027 revenue, $81.6 billion, up 20% quarter-over-quarter, up 85% year-over-year. Data center, $75.2 billion, up 21% sequentially, up 92% year-over-year. Gross margin around 74.9% GAAP. These are not small beats, they're a statement about where AI spending is concentrating. Narration: Nvidia also told you how it wants to be understood going forward. Two platforms, data center and edge computing. Inside data center, two sub-markets, hyperscale, and AC, AI clouds, industrial, and enterprise. Translation: Nvidia is explicitly grouping the world into the biggest cloud buyers and everyone else building AI factories, including sovereign and enterprise deployments. This is a product and capital narrative shift. AI hardware is no longer a component story, it's infrastructure, and they want reporting to match the buying centers. Narration: now the operator meaning. When a vendor hits the scale, the bottlenecks move. It's not only can you get GPUs. It's, can you power them, network them, cool them, and legally ship them? Nvidia highlighted both compute and networking inside data center, and that's the clue. In an AI factory world, networking and systems integration become a larger share of the real constraint. If you're an operator, this is when procurement turns into architecture. Narration: 3 things to watch after this release. 1. Outlook language about regions and constraints. Anytime a company says not assuming revenue from X, it's telling you where uncertainty lies. 2. The mix shift between hyperscale and AC, it's the cleanest public proxy for whether AI factories are spreading beyond the biggest clouds. Not used. Narration: create a polished explainer video in a newsroom style. Use source cards, chart cards, and a simple timeline. Avoid any synthetic real event footage of stock markets, executives, or geopolitical events. Keep visuals clearly illustrative, press release cards, simple bar charts, and a supply chain map. Keep on-screen text short, 2 to 6 words. Use to host energy, a calm lead narrator and a skeptical analyst who interrupts twice to ask the viewer's obvious question. Separate confirmed facts, directly from Nvidia's earnings release, from analysis. Include a brief not financial advice disclaimer early. Format: explainer. Style: classic. 1 May 20, 2026, earnings release date, 2. Q1 ended April 26, 2026. 3. $81.6 billion revenue, Q1 FY 2027, 4. Plus 20% Q/Q revenue growth 5. Plus 85% Y/Y revenue growth 6. $75.2 billion data center revenue, Q1 FY 2027, 7. Plus 21% Q/Q data center growth 8. Plus 92% Y/Y data center growth 9. 74.9% GAAP gross margin 10. $91.0 billion revenue outlook for Q2 FY 2027, 2%. 11 Not assuming any data center compute revenue from China, outlook assumption, 12. plus $80.0 additional share repurchase authorization 14. Dividend record date, June 4, 2026 1 page summary 2. Links mentioned 3. Key terms explained, AI factory, data center vs edge, hyperscale vs AC, 4. Practical examples, operator constraint map plus watch list template, 5. Watch list and risks, policy language, power/networking, buyer mix, hashtag AI, hashtag Nvidia, hashtag data center, hashtag AI infrastructure, hashtag earnings.